Good morning, everybody. What is going on? This is the Investing Bros. Welcome to our morning live show where we go live 9 to 10 a.m. Eastern Standard Time every weekday morning to cover Bitcoin and crypto and stocks, cover the TA and the news and everything you need to know for your investing journey. We got a big day today because yesterday, Credit Suisse, we talked about it, how they were in trouble, but they have been bailed out. Once again, we have another bank bailout. Also, the Fed is in the news today because there's some interesting things happening with them. Not only are we potentially expecting them to print another $2 trillion as a part of their, for a better way to put it, bailout plan for banks, they also have an instant payment system coming very, very soon, which could delay the American version of CBDCs. Make sure you do not go anywhere for this entire show because we've got a lot to cover. Go ahead and smash that like button, that four-fingered mitten right below what you're looking at on my face. And then if you're new here, go ahead and subscribe to the channel for content just like this. It is going to be a great day. I am joined by two fantastic co-hosts this morning. I'm going to start off with the man sitting across the desk from me, and that is Mr. T. Shroom. How are you doing this morning, T. Shroom?
I'm doing better than I deserve, even though my team, Liverpool, lost to Real Madrid. I am doing pretty well and, support my team here. So I got a great quote of the day. If you'll go over to my screen, it is, when you walk to the edge of all the light, one of two things will happen. There will be something solid for you to stand upon, or you will be taught to fly.
Ooh.
And that is from Patrick Overton. So a lot of uncertainty ahead, certainly in the financial markets. So you got to be prepared for everything. And that starts with your own personal emotions. You got to get those under control and be ready for whatever life's going to throw at you.
You know, that gives me the same vibe as the quote that's like, hard times make strong men make easy times make weak men, and weak men make hard times. Sometimes you just got to face difficulty, and that's what ends up making you come out stronger. We're also joined by Army Piper this morning. How are you doing this morning, Army Piper?
I am enjoying my final day as a soldier. That's what I'm doing.
Hey, come on. Congratulations. You're not officially out. The official date is what date again?
My official date will be June 30th, but I am on terminal leave starting tomorrow when I pick up my DD-214 and I am discharged from the Army. So June 30th, I will be, July 1st, I will be officially on the retirement rolls, but I am on terminal leave all the way through till then. So I'm getting paid to be a bro. That's what I'm doing. I'm being paid by the Army to be a bro between now and then.
That can't have a better job out there than to be a bro. I don't know if you guys saw those tweets. I know T. Sherm responded to him yesterday from Louis C.K. First of all, Louis C.K. Has had enough problems of his own, but now he's going and trying to piss off the crypto and Bitcoin community. But he talked about how many crypto bros he could piss off. And, it's okay, Louis C.K., because there's bigger and better things. It's called investing bros. And we're coming for you. Let's go ahead and read some names here, and then we're going to jump in and get into our information today with our macro news. We're going to jump into some TA, not just Bitcoin, but today I'm actually going to have Army Piper dive into Ethereum. He's in some juicy trades over there. I want him to take a nice big look at what's happening on Ethereum, and maybe, who knows, we might get into some other altcoins as well. But let's read some of these names. First of all, we have Yair Navarro is the first comment of the day saying, good morning. 0.080 from one coiner. All right. Wow. Come on. That close. Better act on it fast, though. You never know if Bitcoin's going to take off again here. CBD Suddy saying, Marnin, y'all. Love it. Love it. Got that southern drawl in there. Justin Eubanks is here. Gia S is here. Crypto JMP. Joe Nickel. Crypto Trades. Mr. J. Steve Shrum is in the building. Steve B as well. So we got lots of Steves here. Crypto Ben Franklin, everyone's favorite non-president. Al Bundles is here. We have a lot of people, or not say a lot of people. I saw a lot of comments about Beamer. Is Beamer locked up today? You know, Beamer, I think he's out there roaming in the living room. Maybe Beamer.
He's in the hallway.
Appearance. Is he in the hallway? Is he guarding the door?
He was, yeah.
He's okay, good. Beamer's at his post. He's guarding the door. Who knows? Maybe he'll make an appearance today. We shall see. Who else is here? Curtis Rorick is here. Elo Brown is here. Al Bundles. Let's see who else Williest is here. Servando Estrada.
Servando Estrada.
You know, it's just one of those names. You got to get two of them. You know what? For good measure, Piper, let me get your take of Servando Estrada as well.
Servando Estrada.
There we go. There we go. Grand Roofing Incorporated is also here. All right. So I say it correctly, I think, but every single time I read it, it messes me up. Flesk. I think Flesk is here. Munchies is here. Bob is here.
Nice.
And let's get a couple more, and then we'll jump in here. Zanian Snowflake is here. Crimson Caravan Company. Crux of Crypto with that blue wrench. Alton Henderson. Scott Trod 17, and a mellow fellow. Welcome everyone who is joining the stream. If I did not say your name, it's not because I don't love you. It's just time to move on with the content. And we do have a good amount to get into. I do need to reference something yesterday. And T-Shrim, I don't even know how much you know about this, but I got the privilege of being on Around the Blockchain last night. And oh my goodness. I have to apologize to all of our fans, to my mother and father who raised me better, but I had the mouth of a sailor last night, and it was a complete accident. I know the people watching it live probably got a very big kick out of it. I grew up not cussing whatsoever, right? And if I ever said anything that was even close to it, I got in very big trouble. So I don't have a problem with cussing. When people cuss, like on our show or anything, I'm not offended. I'm not upset at it. I just don't cuss myself. That doesn't stop my brain from going that direction. So I'm on a roll last night on Around the Blockchain, and I'm talking about banks and how they want to try to like make us think everything's okay. But my brain just thought the sentence, and before I know it, it's coming out of my mouth, and it threw off the rest of my take.
Yeah.
I'm going to say it properly. I'm going to say it the censored version this morning. What I was talking about is if you find a pile of horse poop
There you go.
in the kitchen, you can tell me it's anything else, but in reality, it's horse poop, right?
Yeah,
but that's not how it came out on Around the Blockchain. So,
I showed Amanda that clip, and she got a hoot out of it, and I thought it was really funny.
oh
And
my gosh.
just for full disclosure, Army Piper and I are both in the Army, so you know, while we probably like to not cuss, you know, it's kind of baked into us.
It's kind of an essential thing. So maybe now I can join the Army. Now that I'm cussing, I can join the Army. Is that what you're saying?
Maybe.
Goodness gracious. It was a lot of fun being on there last night, and it was a very interesting show. With that said, let's get into some of the content. Let's start off by throwing it over to Army Piper to get our macro update of the day. We got a lot of things shifting right now, Army Piper, with what the prediction for the Fed rate is and some other things. What are things we should be looking out for that are big on the horizon?
So looking today, Tim, we've got the building permits came out this morning. That was kind of the big thing today. It came in at $1.524 million, up from its previous 1.3 or not dollars permits. 1.339 was its previous amount. It was actually only supposed to be about 1.34 million to 1.33 million for new building permits that were started. And it looks like it was higher than that. So you can expect that building permits are going to be handed out and new housings are going to start. So there you go. And you can see that from housing starts. We were previously at 1.321 million. They thought it was going to be less than, and it's now up to 1.45. So they are building again, which is interesting because I actually saw yesterday that labor costs were up, so it made sense, right? The other thing is the initial jobless claims that came out today. What this is, for those that don't understand this, initial jobless claims are put out weekly, and it is the number of people that have filed for unemployment. So when you look at that Janet Yellen, that Elizabeth Warren, T.A. Tim's aunt, yes, arguing with Jerome Powell over job losses that are coming, and you can see that previous week, we were at 212,000. They thought it was going to be on a consensus lower than that at 205,000. But the 214,000 here was what was forecasted. So they thought it would be higher. Actually came in at 192,000, came in lower than expected. Jerome Powell winning that whole argument on his mission was to destroy 2 million jobs in America. Not actually the case this week. So that was the big things today. Jumping over, taking a look at the FOMC, you can see that currently right now we are still sitting at a 28% chance for 0 basis point hikes next Tuesday on the 22nd of March. We're going to be live for that. Do not miss that episode, live with Jerome Powell speaking right after they drop the rate. So currently we're looking at a 71.6% chance for 25 basis points. If we get the 25 basis points, you got to remember it was 50 basis points for there for a while. A lot of people baked that into the markets. If we get the 25 basis points, we could see a little rally. But if we get 0 basis points, I do think we're going to see a really big rally in the markets that day, Tim.
Yeah, did you refresh your page before you present that? Because what I'm looking at, same page, I'm seeing now 59% says 25, 40% 0.
Yep.
Boom. Yeah, and then what's really important.
I probably did not refresh that. Yes, so
Yep.
there you go. So it's getting even more bullish. So
I think even carrying this on, people need to be aware. We talked about this yesterday. It was the title of yesterday's video. The potential for a 100 basis point cut by the end of December. It is still baked in. It's a little bit different. Things did shift yesterday after we were live. Right now, the prediction for December, 32%. So by no means is this overwhelming, but 32% are predicting by December we're at 375 to 400. So technically speaking, that's only down 75 basis points from where we currently are. But if we do see a 25 basis point rate hike here either in March or in May, let's see what May is saying. Yeah, May is predicting 49%. It's still at 475 to 5. So what it's looking like right now is we're baking in a 25 basis point rate hike, and then the rest of the year, 100 is going to be cut off of it. So very, very interesting year that is still ahead of us here in 2023 and has a lot of meaning for what's going to happen in Bitcoin and stocks and crypto. So make sure you guys stay strapped in daily to keep this update coming. Let's go ahead and jump over to some Bitcoin this morning. And as the title suggests, we're going to kind of evaluate, is Bitcoin ready to rally? There's a lot of things right now I'm looking at on the charts that would say yes. There's a couple things that say no. And a little bit later, I'm going to even have Army Piper do some Ethereum TA, which I think at the moment, Piper, you're still a little bit more bearish there. And I know you can't talk because I think you're muted when I'm on my screen. But you're a little more bearish on Ethereum, and I can understand exactly why. We're seeing a little bit difference in the charts. Bitcoin looking a little more bullish than some of the other cryptos. Let's take a look at what is happening. The first thing is, after we blew up here just 2 days ago, all the way up towards 26,500, we have come back down. We're not closing candles above this very crucial 25,200, but we do continue to touch it both of the last 2 days. This is something that I think could be very interesting because even before I get into some juicy indicators and looking at the charts, we've proven after a very long time. Again, we haven't been above 25.2 since back during that massive fall we had in June of 2022. So we're coming up, we're just a couple of months away from an entire year, but finally we broke through, proving that the liquidity is there. As I've talked about in other shows, I still think that there's a lot of weight pulling us closer towards, which one am I going to pull up here? Chart prime. I still think there's weight pulling us up here towards this level right here at 27,000. This right here, all these lines that are scattered across, this is one of the cool things about Chart Prime, where it gives you a bunch of different levels of support and resistance. It even ranks them on the amount of touches and amount of power each one of them has individually. But you can see we've been playing, the best way of reading this, these are charts from the daily chart, 12-hourly chart, and 4-hourly chart. Looking for the bunches has been a very, very lethal way of using this. You can see we came and bounced off of it just here the other day when we got that bottom after having terrible news in the crypto banking world. But now we're sitting here hesitating at very crucial levels at 25,300. You see that we've had yesterday's wick went up and touched that again. And also this little level on 4-hourly chart around 24,800. Guess what? That's exactly where we're sitting at right now. But the next level above us, and the thing that I'm looking at right here is with that wick pushing up, it's not 100% certainty, but a lot of times when you see a candle wick go somewhere, it's proving that there's an ability to go up and retouch it once again. That is a massive candle wick. And I'm not saying we're not coming back down and experiencing lower levels down the road. What I'm saying is I think there's a decent chance, even if we don't close a daily candle, that we do make another pushback up here, hitting this $27,000. This is also a significant range when we're looking at the fixed range volume profile. We've talked about this before, but in case anyone is just joining us today and missed some of our other episodes, you guys remember talking about this for a while. Let me take down our lines. we've been talking about this gap in the fixed range volume profile, that if we could conquer 25.2, there's an easy run up all the way towards 28. Well, guess what? Again, when you zoom in on this gap, the exact bottom of this fixed range volume profile, meaning the exact valley, the place where there's the least amount of volume, is right there at 27,000. So again, when you also pair that with that we are in right now what we would call a megaphone pattern, and we didn't quite get that wick to come up and touch it, and we have a cross of not only flat level resistance but rising resistance, it would make a lot of sense here, maybe today, maybe tomorrow. I'm not 100% certain, but to come up here and touch 27,000, I still think there's a decent chance of that happening. Let's go and look at some other things as well. Let's pull up our dynamic reactor. Also, by the way, great calls we have here from Sharp Prime with our predicted reversal, which has been very lethal here. We also bounced off of our dynamic reactor. Let's take a look at some other things we have going on. I want to go into this setting. This is really cool. So many options you can play with when you get Sharp Prime, but I want to turn on trend lines. I like to draw trend lines myself, but this is a cool feature that Sharp Prime has that you can use. You can draw trend lines to help you identify things at a better basis. And out here on the daily chart, you'll notice that we had been on a trend line with support for a very long time. Yes, we broke bearish when we got all that terrible news, when Jerome Powell says that we're going to raise interest rates higher than predicted, when we see the largest crypto bank for liquidations go under in Silvergate, we ended up dropping down below, but now we have made our way back above this line. And on the daily chart, we are still using this as a level of support. So if we break this, yes, we could come down. I talked about this yesterday. I think we could come down even as far as $22,000. There's a lot of things there. I'm going to jump in and show you guys on Fibonacci in just a second. But right now, this trend line is showing to be back into a level of support. Keep your eye on that as do we bounce here and head back up to 27,000, or do we break through? Definitely something you want to keep your eyes on. Now, I told you we were going to take a look at Fibonacci. Let me take down my fixed range volume profile. Don't need it right now. I want to take a look at a couple different Fibonacci levels and explain their significance and what's happening here. The first thing you've got to keep your eye on when we're looking at these levels would be the longer time frame Fibonacci going down to at the moment, the bottom of the bear market. And let's go up to this new peak that we just created. You're going to notice that after we came up and hit that, we came right back down, retesting the 0.236 level, and have found support there. If, again, I talked about this a little more yesterday, in technical analysis, you always want to use if-then statements. If we break this level and we start to head back down, this is what I was talking about, that lower 22,000, 22,300 level at the 0.382. That's the next level I'm looking at with significance of Fibonacci to keep your eyes on. But it doesn't stop just there. Yesterday, Army Piper made a amazingly beautiful video over on Sharp Prime talking about a level on Fibonacci that nobody talks about. And it is called the platinum, the platinum, what is it? Pocket.
The platinum pocket.
Platinum pocket. All right, let's talk about where we are with Bitcoin right now. Let's do this. So usually when we're using Fibonacci, we're talking about Fibonacci retracement, meaning we're having a starting point, we go to a down point, and then it's like, hey, where do we retrace? Not getting back to that level. First of all, you always want to keep in mind what the Fibonacci extension could look like. And going from these tops that we had here back in February down to this more local bottom, you can see that what we rallied up to was we didn't just come back to 25.2. We rallied up to the 1.236 level, got rejected at it. But this is what Piper talked about in that video. When you blast through the golden pocket, and I'm saying when you destroy it, watch for significance to happen in what we call the platinum pocket. And that is this level right here between the 0.786 and the 0.887. Where did we come back down after hitting our 1.236 level on Fibonacci? Where did we come back down? Right into this platinum pocket. Another thing I'm looking at here as a level of support that could blast us back up towards 27,000. And guess what? Just because I'm looking at 27,000 does not mean Bitcoin is done necessarily. We still absolutely could jump up to that 28,000 towards that 1.5 on Fibonacci. But for right now, what I'm looking at is an overwhelming level of support. And I'm almost done here with Bitcoin TA. And I usually stay on the longer time frames. But another thing that I'm looking at right now is going all the way down. I want to turn off my trend lines because that is all I needed to do with them this morning. I want to go all the way down to the 30-minute chart. This is another really cool thing about Chart Prime. This dynamic reactor is absolutely beautiful if it wants to load for me, because I talked about this the other day on a different episode, but when you guys are looking at SMAs, a lot of people love looking at the 100 and 200 SMA. They love looking on the daily chart all the way down. This dynamic reactor, more often than not, is almost right in the middle, and you're going to see it correspond almost every single time. Every time we have a cross of the 100 and 200, you're going to see it get it there. But if you're ever wondering when people are talking about, oh, we're using the 200, 100 as support, but we're kind of getting away from it, look at how often the price action gets back up in between the 100 and 200 and ends up finding resistance or support on this dynamic reactor. Look at this 30-minute chart. As we have come back down, we have just been riding this up again. I know this is just a 30-minute chart, and 30-minute charts can adjust very quickly, but this is another reason we are finding some nice support on Bitcoin here on the 30-minute dynamic reactor, pulling up even our oscillators. Even though we flashed overbought, we're continuing to climb here. On the longer time frames with that same oscillator, we still had a bullish dot just come in. Our last signal was oversold. Do not be surprised if Bitcoin makes at least one more push up towards that 27,000. Before I hand it over to Piper to get into some Ethereum, I also wanted to take a look at another indicator that is very important, and that is our Dixie over here. I want to take down my other things here. You're going to notice the Dixie is still rejecting. After having a very good day yesterday, it only came back up to retest what was formerly support, turning it into resistance. This is a bearish move for the Dixie, which is a positive for Bitcoin and crypto. So let's continue to watch what the Dixie is doing. But at the moment, it does look like the Dixie could be headed back down to the bottom of this falling channel it's been in. We could potentially see it come to the golden pocket down towards 98, maybe $98, give or take here very, very soon. We'll keep you posted on that. With that said, though, that was the Bitcoin TA. I want to throw it over to Army Piper to get a little more look into the macro of Ethereum. So go ahead, Piper, and take it away.
Appreciate it, Tim. So yeah, taking a look at Ethereum here, guys, looking at the 4-hour chart right now on ETH versus USD, you can see a couple of things here. One, we did get a nice bounce off of our dynamic reactor on this run up that we did here back on Sunday. Moving it over into here, you can see that we did have this trend line that we had broken beneath. It was previous support back in here and back in here. However, once we broke above it here, it was a fake out. Right back down we came, and now we're kind of in this broadening wedge from the trend lines that have crossed and inverted from the previous wedge that they had created. So one thing to note here is that we did get a perfect bounce here on this previous resistance line from back in here. That is now support. And that is a good thing, right? But we are also on the 4-hour still riding above the dynamic reactor. What's bothering me is that right here, you can see we are starting to create this little channel, and that is a rising channel, guys. A rising channel typically breaks to the downside, and you can see this even more defined if we go over here and we put this onto the 1 hour. Matter of fact, you might even say that right now, based on that trend line being the bottom of that channel, that we are breaking it currently right now on the hour. I do think that we're going to be coming down to about 1611 if this does play out. But going back to the 4-hour, what I want to show you is that we have some things going on in our support ranges and support lines. So first off, let's go ahead and let's throw on the predictive ranges from the Smart Money Concepts bundle here. As you guys know, I talk about it all the time. This is the trade band of the predictive ranges. If you watch that video that I dropped yesterday on Chart Prime's YouTube channel, I talked about this in depth. But right now, we are currently using that upper trade band, the upper gold trade band of the predictive ranges as our resistance and rejecting down off of it. It is very likely that we could be coming down to back to the delta line, that blue line in the middle. You can see typically it's known as support for it unless we get below it, and then it can easily be flipped into resistance. So what I'm going to be watching for on this is that if we come down and we break our dynamic reactor here in line with that confluence of support coming off of the delta line of the predictive ranges, and we break below it for a retest, I'd be looking for us to come down to somewhere in the range of the low 1500s. This is further supported when we take a look at this here. Yep, there we go. You can see here that we actually have, and this Fibonacci that I'm looking at right here is taken from down here on the bottom to this top point, and that's how I place those Fibonacci's. But if you look here, we actually have the 618 of the golden pocket coming in right here on that lower trade band that I was talking about. That's going to be currently coming in at about 1530. So if that is where we get our bounce at, if we do break down below these ranges, that's where I'm looking for that bounce to be at, coming back down into this golden pocket before we come back up. One thing I do want to show you, though, is that if we turn off this fib and we turn on this previous fib, this is going all the way back. Let me get back here to like a 12-hour to show you these points that this comes from. This comes from all the way back at the high in August that we had here, when we had that nice run up from the bottom there on Ethereum's low for the whole cycle. And then it also measures this double bottom that we had here as the second point. So from there to there, giving us these entire Fibonacci ranges here. And you can see again, what we had was possible reversal down from the market oracle. We rejected on the candle close perfectly at the 66% of the fib here. And down we go out of the golden pocket. So I can see us hitting in that 1530 range. Even on this 12-hour, it's still going to be coming in at the 50% line at 1550. And that's where I see, if we break this wedge here, just like we previously saw a Bitcoin that I pointed out to you several weeks ago, when it finally broke that long-term trend line that we had going on Bitcoin on the 12-hour. If we have that today with Ethereum, I could see us coming down 1550 to 1530 range on Ethereum, Tim. Let's go ahead and jump over into ADA, because I got some things that I'm seeing over on ADA right now also. And just so you guys are tracking, in our community of Chart Prime Discord and in our community for Investing Bros Discord, we're going to be giving away $900 total in Cardano on April 1st. So if you guys are not over there, all the details are in each of those communities. There's going to be a sign-up sheet, and you will see how it happens. It's going to be randomly selected, but we're giving away $900 in Cardano. So I would love to see Cardano find some support and bounce back up. And so that this, after this $100 in ADA is handed out, so that these people can make some serious money. Because $100 in ADA right now could be a lot of money in the next couple of years, Tim. Yeah. So let's go ahead and take a look at what we got going on with ADA here. ADA currently right now getting rejected on the 12-hour multiple times on its dynamic reactor. We also got a perfect rejection off of that upper resistance line of the predictive ranges here. If we go ahead and drop this over to a 4-hour, zoom it in, you'll see there's that delta that I was talking about when we're beneath it and we get a test on it, rejected, down we go. We even broke the lower trade band. That would be the top right there, bottom right there. Okay, so let's go ahead and see where we could be going next. I do have a couple of fibs that I drew onto here. First off, we're going to take a look at this trend-based fib. This trend-based fib is going to be based on the previous trend that we had on the way down, high to low to high. That's how you do a trend-based fib. And if you take a look at where we are right now, we are currently beneath the 1-to-1 line, which means we could be coming back to retest this phase 1 golden pocket that we previously tested here before we got the up. That's coming in at about 30 cents on the dot. Good psychological number. Also giving us that previous bottom there for a double bottom, and the phase 1 golden pocket. So we could see that there. But if we turn on the fib retracement coming from the low to the high of this entire price action range here, you can see currently right now we are getting our support in the golden pocket. So if we can hold this golden pocket, maybe we won't see that 30 cents. But right now, kind of consolidating. And when you have that consolidation after a run down, usually tends to go to the downside. The only hope that we have right now is this golden pocket, and the fact that this is technically if on the higher time frame, a higher low. So that's what I'm seeing on ADA right now, Tim. That's what I'm seeing over there on Ethereum. Currently in a short on my Ethereum trade. So if it does go down, I'll make some money on it. But I am also in a longer term long trade on Ethereum, and I'm using that short to hedge my profits and gains. I don't want to close it out because I have a very great entry on it. So, but that's what I'm looking at.
Well, go to my screen real quick, Piper. As you were talking there, I went and just wanted to look at what the pairs had looked like. Cardano over Bitcoin in a falling trading channel. Yes, on the daily chart, we actually did just flash oversold at the moment. However, the RSI is not necessarily that low. We do have longer term bullish divergence, but we could see Cardano fall even more against Bitcoin here. Even going over to the Ethereum over Bitcoin chart, it might be even worse than that. When we're looking at, it is forming right now a descending triangle that traditionally breaks bearish. We most recently had a flash in the daily chart of not only a peak seeker, but then we had that bearish reversal triangle come in. RSI is not that low. We could see Ethereum fall against Bitcoin. So even all the stuff you're talking about, like we're looking at more, maybe more bearish for altcoins, especially Ethereum and Cardano, whereas Bitcoin might not have as much bearishness going on. It makes more sense when you're looking at these pairs. Do we see Bitcoin, when we look at the Bitcoin dominance chart, do we see this Bitcoin dominance, which currently is in an ascending channel itself, do we see it just continue to climb back up potentially towards 50%? We'll have to keep posted on that and make sure we keep our eyes over there. It is 9:30 though, so let's go ahead and shift into some stocks for our open this morning. Everybody who is watching, thank you so much for tuning in. We got 92 eyeballs right now on the screen, but only 58 likes. Go ahead and smash that like button right now. Let's get that up to over 100. Oh, we just jumped up to like 119. I don't even know what happened there. Let's get that like button over 100 here within the next couple of minutes. With that said, T. Shroom, what are you seeing this morning in our early minutes of the stock open?
Yeah, absolutely. Well, if you'll go over to my screen, actually, I wanted to point out that we do have a link down in the description for TikTok next block, Miami Beach, May 18th through the 20th, 2023. This is the Bitcoin Conference 2023. If you haven't got your tickets yet, go ahead and get them. You get 10% off when you use our link down in the description, and you'll be able to see your boy, T. Shroom, there. Let's go ahead and dive right on into the market open here. Going to go up to the top and start with energy, as we do so often. Oil taking another big hit here in the first minute of the New York session, down 2.6%. Really remarkable to see oil just completely selling off here. Now down to $66 a barrel for WTI.
Pause real quick, T-Shroom. It is looking like your mic is not working.
Really?
Kelly is saying wrong mic selected. Steve said
mic
off.
I noticed that earlier that your tone changed on your mic also, Tim, and I think that
really?
that issue. Yep, I think that issue that T Shroom normally has in the morning is taking place right now. What we can do is he can reboot that while I take a look at a couple of the bank stocks that he wanted me to look at, and we will see if that fixes it. So let me go ahead and jump over there. Hey guys, check this out. So one of the things that that we wanted to look at this morning, first one is Goldman Sachs. We wanted to see how the banks were looking this morning on the TA. And if we take a look here right now, you can see that Goldman Sachs on the 4-hour right now at opening right now, currently coming in at about 307.67 here. But we do have this bullish engulfing candle here that we printed off of the candlestick patterns, and we do have a possible reversal up. Looking right here though, you can see we're just starting to get a little tight on the oscillator cloud. And typically when we have that, it means that we're going to go sideways for a while, or we're going to see a move. Based on what this is, I think we're going to be sideways right here at this lower breakout frame of the predictive ranges. And it's just going to be some sideways action right now because of uncertainty going on with the banks that we have. So let's take a look at what we have going on some higher time frames, and let's see where we could be heading here. You can see here on the higher time frame on the 12-hour looking at Goldman Sachs, we are below the previous predictive trade band. So we should be starting sometime in the next 24 hours a new predictive range, probably going to be setting the delta right around in this window right here between 304 to 312. And then, of course, if we do that, remember, we're going to have those two trade bands, and that's why we'll base the next move for Goldman Sachs at that point. Let's go ahead and jump over to the other one that he wanted me to check out. Actually, first, let me show you this on Goldman Sachs. One thing real fast. We do have the MACD, and that signal line is still pushing down pretty hard in the straight down direction. And we have still bright red clouds, bright red columns, on the MACD right now for the histogram. When we had this before, even though we had a little pull up here, which would be this little pull up that we had here on the price action itself, you can see we still consider down. So we could see, theoretically, all the way down here into 290 range, matching up with this current volume that we had back here. And lastly, let's go ahead and throw on a VRVP and see how we're looking there. You can see right now, we do have a support range coming in at about 302 on the VRVP here, but we're currently in a little gap between this peak and this peak. Interesting to see that if this little tiny volume node doesn't hold, we do have another gap that's going to be coming in right here at those local bottoms that we had previously before. So that's what I'm seeing on Goldman Sachs. Let's go ahead and jump over into JP Morgan here. JP Morgan right now below its dynamic reactor. I think that this is going to be looking pretty sad for it if it cannot get back above there. It is in this trade band. Remember, there's the bottom of the trade band. I could see us easily coming down to the delta, possibly even wicking to the point of control of the VRVP coming in at about 115. The sentiment right now with the banks is not very good. And despite this oversold with the uptick trend right here and that dot that we have going on from the momentum cloud, it's a momentum dot there. You can see that the MACD still looking red and bearish on the histogram. I would assume that based on the current sentiment of the banking industry, that we're probably looking at that 118 or even down to that 107 on JP Morgan. Shroom, I see you back in here. Let's go ahead and jump back over to you.
Is that?
Yeah. Can you hear me now? Let me know. So we'll go ahead and keep moving on. Natural gas peaking up a little bit today. It was starting to look like it had put in a bottom, was moving back to the upside, but it's now moving sideways. Let's go ahead and take a look at our indexes here, all opening up pretty scared. See Dow Jones up, down 0.5%, NASDAQ down 0.4%. So pretty even across the board, not really much to kind of extrapolate here or predict. This data could give us really much insight going forward other than it's down. The market not really liking this. The Asian markets were down a lot more than this when they closed.
Real quick, T-Shroom. So the mic, it sounds like it's still not working. By the way, Piper, is mine working at this point? I know you said mine kind of got muffled as well.
Yours changed in tone, but you're still close to it. He's coming over through your microphone is what's happening. So,
T-Shroom, are you sure that you're still set up through the mic system, or do you think you're set up through your computer? Did your thing auto adjust to your computer? Because Kelly Kellum just he said it sounds like a computer mic, but you can hear it.
No, it's not that.
All right,
you probably just need to restart your computer.
So what we might need to do, we might need a little bit of a delay. The good news is that Piper can keep going. I'm going to have to restart my computer, which is attached to these mics.
I can just switch over to the computer mic.
While you do that?
Yeah,
go shift over, and then I'm going to go. Make sure, Piper, T-Shirt, when you're ready for your screen, ask him to share your screen.
Okay.
Sweet. I'll be right back.
All right, so pardon us for the technical difficulties here, guys. Is the mic working now? Let me know. I've switched over to my computer mic, so should be.
It's a little bit louder, but yeah, he definitely needs to restart and come back in. But let's continue on. The show must go on. You have no microphone. All right. All right, guys. So while they're getting that fixed right now, I don't think he realizes that his mic is completely off. So let's go ahead and check out some more stuff here. Let's go ahead and jump into some Polygon Matic, and I'll show you what we have going on here with Matic right now. I'll be watching for them to jump back in, and we're going to get this going, but I'm going to carry it on until then because that's what we do. Continue the mission, fight through the objective. So looking here at Matic right now on the 12-hour, you can see Matic trading on its dynamic reactor, currently on that upper trade band right now that we have. But I can't hear what he's saying either. He's actually muted on my end too. So taking a look here, what we have, guys, we're on the dynamic reactor, on that upper trade band of the dynamic predictive ranges that we have here. But we do have a ribbon twist on the 12-hour right now with that red momentum dot coming down into the cloud right now. And you can see the MACD is currently hitting. That probably helps. I had them cut over. You can see that we do have that momentum dot coming down into the cloud with the ribbon twist here. We do have the MACD histogram that is pushing down right now, and we are getting that twist right now of the signals to the trade. So yeah, it's the Piper show until it's fixed. I'm running to it here, guys. Currently, right now, getting rejection on that dynamic reactor, like I was telling you, and it looks like we're going to be having some problems. This could be coming back down to the 99-cent range easily on Polygon Matic if it cannot hold this range. Again, I just want to point out, guys, something that was being said earlier is that if we have the Bitcoin dominance continue to go up, it doesn't necessarily have to mean that the altcoins are going down that much. The altcoins can just stay static while Bitcoin goes up in price right now, and that will still make the dominance of Bitcoin go up, making it look like the alts are weakening. However, they're not weakening. All they're really doing is just staying static. So if Bitcoin continues to go up and the coins stay static where they are at their current levels, then we're going to have to see that Bitcoin dominance go up. And if the alts can continue to drop while Bitcoin is doing its thing and going up, then we'll see a massive change in the dominance. But the one thing that I want to show you guys here, check this out on a daily, and I'm going to go ahead and turn off the indicators here because we don't need them. But if we take a look at the Thursdays that we previously had here, let's go back. This is Thursday today, and Thursday today we are currently green, yes. But if we look at the previous, like this Thursday right here, looking at this chart, you can see big red day on a Thursday. I've been watching this for a while. Red candle on a Thursday there. We had a red candle on a Thursday there. This was a red candle on a Thursday. And I believe it was one more. Yep, right there on a Thursday. So we've actually, the big candle is a Thursday. So we've actually had some changes in the candles, and I'm going to go ahead and jump back over. We actually had some trends though on Thursdays of downside days, but let me go ahead and jump over to Tim Cam and see if he has any sound. It says,
All right. Do you hear me now? Piper, you hear me? This has been a fun technical day. This is what you do when you get shows.
I was trying to carry you. Welcome back. You sound good.
There we go. There we go. Yeah, we have just a bunch. Real quick, I want to test T-Shroom. T-Shroom's mic, are you good now?
Can you hear me? Can you hear me?
T-Shroom, you sound beautiful.
All right. Yeah. All right. Everybody who continued to watch through all of that chaos, thank you so much for staying consistent. This happens to the best of them. Technical difficulties are a part of these shows. But thank you so much to Army Piper for continuing to carry it on. That's one of the awesome things about having a third bro here in Investing Bros. That even
we broke down
one or two is problems. Yeah,
we broke down Matic, and we talked about that Thursdays for the past 2 months has been red days on Thursdays for the past 2 months on daily for Bitcoin. So we did talk about that. So
awesome. Awesome. Well, let's jump in here, T-Shroom. I know that we finish up real quick and then jump into stories. We'll continue on with the show. But again, thank you to everybody who stayed with us this whole time, and I'll throw it back over to T-Shroom.
Yeah, absolutely. Well, back on my screen, you can see I've jumped ahead here to oil producers, which are selling off as oil is continuing to be a growing story here. The sell-off in oil is a growing story, but is obviously being overshadowed by the banking crisis. So, that's something to watch. It's an undercurrent that we don't want to just ignore. Your microcap stocks here, microcap tech stocks here are pretty mixed. Jenny getting bought, and Snow leading the way downward on my watch list here. Cannabis selling off, and then your bonds are going to be an interesting head scratcher here as the 2-year yield is pushing higher just barely, but then the rest of them are selling off pretty decisively there, with the 5-year yield coming down the strongest. So interesting moves here in the bond market. Well, that's going to go ahead and basically round out our market open. There's not a ton more to see other than you kind of have mixed movement here in the big cap tech stock. So we'll go ahead and we'll just go ahead and shoot over to our stories now. And we'll start with a pretty big breaking story from this morning, which is that First Republic is falling 30% as regional bank stock continue to sink. So the contagion may continue to be spreading. He's here for First Republic. Now, what I will say is that First Republic was up quite a bit earlier this week. So this 30% could just be a retrace of that movement to the upside. All right, moving into the Swiss stories here, which are kind of the biggest ones and are the leader for our thumbnail. Swiss regulators to bail out Credit Suisse with additional liquidity. We were talking about it yesterday in our Discord, and we're going to talk about it now. Swiss National Bank, SNB, the Swiss financial market supervisory authority, FINMA, have announced that they will provide Credit Suisse Group with additional liquidity if required. That's big. It coincides with the bank's announcement to borrow about $54 billion from the S&B, from the Swiss National Bank, to raise its liquidity and investor confidence. In a joint statement, Swiss National Bank and FINMA said Credit Suisse meets the capital liquidity requirements imposed on systemically important banks. So it's systemically important, yes, but that doesn't mean that it doesn't that it hasn't have a closet full of skeletons, and we're going to dive into those skeletons now, because the market and the media is kind of playing the Swiss crisis off as, oh, there's just some minor liquidity issues over at Credit Suisse. Well, that's not necessarily the case, because if you take a look at my screen here, is that Credit Suisse has been guilty of tax fraud, subprime mortgage fraud. They've been accused of aiding clients engaged in tort, drug trafficking, and money laundering. And there's a bunch of details here, but for the sake of time, I'm probably going to skip through them because that title kind of covers it all, right? A lot of big banks have been caught doing very nefarious things, but Credit Suisse is definitely high up on the list, up there with JP Morgan, with doing some pretty bad, terrible things, not in the interest, certainly, of their depositors, but also not in the interest of just humanity in general. Not surprised, whenever you get very large institutions, you're going to have negative outcomes because there's people running it and people are flawed. But Credit Suisse, don't be fooled here, guys. Credit Suisse is in a lot more trouble than just a little bit of illiquidity that needs a little bit of bailout here. They have systemic issues, and this also goes for Deutsche Bank, right? Deutsche Bank is probably another name you're going to be hearing here in the next couple months if this banking story in this banking narrative does persist and continue. You could say it differently: if this banking story and this banking crisis continues to be convenient for the market, for the media to cover. Could put it like that way too.
That's a good way to put it. Yeah.
Yeah. Moving on, U.S. Federal Reserve real-time payment system coming in July. So a hard pivot here to kind of a higher level story. Which is basically encapsulated well within this quote. We urge financial institutions and their industry partners to move full steam ahead with preparations to join the Fed Now service, said Ken Montgomery, the chief operating officer of the Federal Reserve Bank of Boston, who has been working on the new system. He said, will offer a modern instant payment solution. So this is not CBDCs, but many are calling this the precursor to CBDCs. And now you see, the whip over there at the Boston Fed is being cracked and saying, comply or die. Make sure that you are in compliance with this Fed Now system. It's going to be this great, shiny new thing that we're going to sell to the banking industry, and they're all going to get in line. And the next thing is going to be CBDCs. We'll see. I personally think that CBDCs are still too underdeveloped by the government in order to be rolled out, but this new crisis may inspire them, may incentivize them to go ahead and invest the resources so that their timeline can be shrunk and they can roll those out a lot quicker. But as of now, I don't think they're ready to roll that out because they have no idea what the consequences are going to be. Moving on, Fed's emergency loan may bring $2 trillion into U.S. banking system, says JP Morgan. Guys, I will point out that while this isn't the story we led with, this is now the top financial story trending on Twitter. So you want to pay attention to this one. And it's all pretty well summarized here in just this one paragraph. After the failure of 3 lenders, U.S. authorities established the scheme earlier this month. The program was set up to provide an additional source of liquidity to these institutions. Alongside it, will eliminate the need to sell securities during a crisis. That's the key there. This will eliminate the need to sell securities during a crisis. According to JP Morgan strategist, the Bank Term Funding Program should be able to add enough reserves to the bank system to lessen reserve shortages. Well, we heard about it, but now yesterday, when they earlier this week, when they announced that new facility, but JP Morgan is now estimating that new facility could be funded up to the tune of $2 trillion, which is going to be that's pretty intense, and that's a sign that the Fed is not learning their lesson here with printing money. So that's definitely a very, very big story to watch, especially on the inflation story. And Tim, I want to throw it over to you actually to kind of get your take on this one.
Yeah, I mean, we've been covering this for a couple of days now. This kind of ridiculous thought about how to handle money. Remember the analogy that I used the other day when we talked about the spoiled little girl or spoiled little boy who every single dollar that their dad gives them, they just run out and they spend it, and they have no sense of budgeting. And what the father needs to eventually do is just stop giving them money. Well, this is the father giving in and saying, you know what, after hearing little Jill or little Joe's cries because they're not getting their way, we're going to go and just give it and give them more money. Just to put this in perspective, it's not quite as much, but during the pandemic, that pandemic relief fund, because I'm not really sure if I'm allowed to say the C word still on YouTube, you never know, that amounted to about $4.6 trillion of money printed to do that. This $2 trillion is not quite half, but is still extremely significant. T-Shroom, you put it very well right there. They're not learning their lesson. After we thought that the Fed looked like they were finally getting responsible, and it didn't matter if Auntie Beth was screaming at them or if the banks were going down, it looks like they're succumbing to the screaming of that spoiled child and saying, you know what, fine, we'll turn the money printers back on. How long? How long, T-Shroom, do you think before people finally wake up and say, this is absolutely stupid. I cannot believe that our government and our federal agencies continue to do this to us, because printing that money, that's just stealing value from every individual who holds US dollars to give to these banks so that they don't go under. How long before people finally wake up and realize that and say we need another solution?
Well, if we've learned anything about the West, it's that people who are comfortable don't take action. They don't demand change, because if you're comfortable, why do you want anything in the environment to change that could potentially put your comfort at risk?
True.
The problem is that so you can't obviously predict it. You're not going to narrow it down to a month. But the problem is that people are too comfortable, and so change is not what they demand. So until people are uncomfortable and they're experiencing pain, like the people in the Ukraine are experiencing, not the exact same pain, but when their lives are torn apart, right? When their view of the future becomes grim and dark, that is when change starts to happen, right? We've seen that again and again in the tale of the story of the United States. And unfortunately, change doesn't really happen when the electorate is comfortable. And right now, if you ask most people on the street, they would more than likely say, yeah, this financial crisis has me worried, but I'm not changing any of my plans. I'm still going to put that new pool in. I'm still next year I'm going to be getting a new roof. They're still investing in the future, right? They still see their dollars worth investing into the future.
Mm-hmm.
And until that changes, you're not going to see too much enough outrage about just generally inflation, eroding the purchasing power of their dollar, until it actually affects them and they feel pain. That's just the unfortunate nature of our humanity, at least in the West. It's a little different in other places in the world, but they're definitely not as comfortable. That's easy to say for me, because I was at the peak of comfort last week sailing on a Royal Caribbean cruise, Brilliance of the Sea. So I am well placed in the demo of comfortable Westerners. Moving along, back onto my screen, we are seeing oil down to $66 a barrel. We just covered that chart here a little earlier. You may not have heard me cover the chart, but oil is down to $66 a barrel. And here is why, or one of the reasons why. Biden has finally approved a controversial Willow oil drilling project in Alaska. This is a story, the whole energy story in general is not one that we want to ignore, guys, because it plays a big impact on inflation. So right now it's moving in a great direction, and it seems like Biden has finally gotten wise to how supply and demand works. And this is a story that you don't want to ignore. Doesn't have super big implications for crypto, because for now, energy has been playing along and moving in the direction that Jerome Powell needs it to move in, so that it does not inspire him to have to raise hikes. And now, obviously, there's a much bigger elephant in the room that is inspiring more than likely his every thought on whether or not he's going to hike 0 or 25 or 50, and that is the financial crisis, the banking crisis. Moving on, we've got now, so those were all of our hard economic stories. We're going to get into some softer stories here, and I'll definitely be throwing it over to Piper and to Tim for their perspectives on this, but we'll just go headline by headline here. Executives from Circle, Aave Labs, and Fireblocks recruited by the CFTC to new tech advisory group. So you can see here that big players in the crypto world have been working behind the scenes, right? As the battlegrounds have been going on in the SEC versus Ripple story and in the stablecoin versus SEC story, as these battlegrounds have been going on, some major players and the CFTC have been working together in a really art of war, Sun Tzu kind of way to perhaps consolidate some pro crypto alliances on the other side of the regulatory world, the other side of the regulatory world that the crypto community has kind of deemed to be more favorable as the custodial of regulation for crypto. So this is an encouraging and optimistic headline in the overall tumult that we are facing here. One more optimistic headline is that this company, and I will attempt to try to pronounce this, Machinkura, I believe this is so they boost African Bitcoin adoption without the internet. So they've figured out a way. The text-based tool to Bitcoin, the unbitcoined, has grown its user base by 10x in less than a year. So this could be a big name to watch, guys, as they've basically been able to use the technology of SMS text message to be able to patch people into the blockchain. Pretty cool stuff, pretty interesting, and very innovative. I'd love to see it. It's the kind of stuff you might see from Charles Hoskinson, and yet it's coming from this company here, which I've never heard of before, but I wanted to bring you guys that story because it is very important. That's going to round out our stories here. So just let me know in the chat, what are you guys thinking about these stories? What is popping out to you? And as we round out, I want to also bring to your attention that we have the Bitcoin. I was trying to mention this when my mic went out, so I want to mention it now. We have the Bitcoin Conference 2023 quickly approaching. Now, this is going to be down in Miami Beach on May 18th through the 20th of this year. I'm definitely going to be there. There's no reason why I wouldn't be there, but keep in mind, I am in the Army, so I could get called up for something. But I'm 100% planning on being there May 18th through the 20th. And if you go down into the link that is in our description, you can actually get 10% off your ticket to that very event. Well, Tim and Piper, I think we can end off the show with kind of just a general discussion. What are your thoughts on what we kind of are seeing here from a macro? Are the events that we've been seeing over in Europe with the Credit Suisse, right, and Deutsche Bank, and also with this headline here with First Republic Bank continuing this trend of tumult here in the regional banking industry. Is all of this going to inspire Jerome to go ahead and cut rate hikes next week, or is this not enough? Does he have a higher priority, which would be inflation? What are you guys thinking? Has anything from today's news and today's charts changed your thinking from previous days? Tim, we'll go ahead and start with you.
You know, even as we're running the show, in the beginning of the show, remember how Piper talked about the prediction for 25 basis points? I believe he was looking at about 70% saying 25. Then we refreshed the screen. It went all the way down to 59. Well, I checked my screen just now again and refreshed. It is back up to 71.6% that we're going to be seeing 25 basis points. We still have 6 days until this happens. What is my takeaway from this? 6 days is a long time. A lot can change, just like it's been changing over the last 2 weeks, very, very drastically. I think everything we are seeing, though, is leading Jerome Powell towards whether he should or shouldn't. I think we're seeing him start to lean into I'm going to go ahead and get a little weak here. I'm going to move back into a phase of quantitative easing. We did not learn the lesson that we had to experience during the pandemic. And so this is just another move. If this is what happens, if we see the rest of this year move back into easing, if we pivot away from interest rate hikes and go back into easing, when you pair that with the irresponsible spending of the government, we're looking at making the exact same mistake we made here just 3 years ago when we were hit with that pandemic. Now, I think you made a great point, T-Shroom, earlier when you said nothing is going to change until people feel the pain. And that's a good observation, because I was thinking through this the other day. What the world needs and what America needs and what Europe needs and what every continent needs right now is a financial revolution. The problem with financial revolutions is that revolutions come with sacrifice. Every single war that was ever fought in a revolution, every single person who went to fight understood that they were putting their life on the line and they could lose it. I would like to think with this revolution, we shouldn't have to lose lives, but you know what might happen is people might lose their finances. To finally switch from a broken form of fiat currency that powers the entire world and the bullies of the world, the politicians and the secret people behind the scenes who really pull all the puppet strings, they will put as much pressure as possible on every single person to continue to bow to them, to continue to fit into the financial situation. And the revolution will come with, hey, maybe you have to lose finances. Maybe your wealth does diminish, but that's a part of what revolutions are. In the same way a war, you put your life on the line. In a financial revolution, we're going to have to put our money on the line. And you made a great point, T-Shroom, that right now, as much as things are starting to get uncomfortable, I do believe people are still a little too comfortable, and we need to see this continue. But guess what? Things like what we have right now, this pushing the problem down the road, yes, they can print more money now. And yes, the government can start spending more money now. And yes, we could see the economy somewhat look good once again, but it's only a matter of time before you keep trying to bail yourself out and you end up just screwing up even worse. And the comfort level will drop, it will plummet, and a revolution is inevitable because people already are living in poverty and they're going to say it's time for a change. So I'm hoping it happens sooner rather than later. But we'll see. It's not a question of if, it's a question of when.
Piper, what are your thoughts on that?
So I think right now the banks, they messed up. They made bad investments. They overextended. They overleveraged. They did all the stuff that FTX did, maybe not to the level that FTX did it, but they made all the same mistakes. Like there's no difference between them, but they're going to get bailed out. I think that people are going to lose faith in the bank again. And if they don't get it fixed to the point that people can have faith in their financial institution, they're going to find a new financial institution. And that's what Bitcoin was made for. Satoshi Nakamoto had a vision, and people are going to start learning that vision when they realize that their bank and their 0.015% yield that they can earn on their account is yesterday's news, and that Bitcoin's the future. So,
yeah. Well, I mean, I would push back on that a little bit by saying that FDIC is not something that most countries have. It's unique to the United States. And while, the beginning of this financial, banking crisis that we're seeing now is kind of starting in the United States, it may actually have the reverse effect, and money could flow outside, from outside the United States, especially Europe. That's had two major destabilized banks, Deutsche Bank and Credit Suisse. Money could come from those banks and from elsewhere in the world as they're kind of reading the tea leaves of the financial system kind of showing some cracks. And that they could actually come into the bigger names, right? Goldman Sachs and JP Morgan, which are on much sturdier legs, much sturdier ground, have a much longer and much more bailoutable model. They've been bailed out many times, right? So I actually could see money switching hands from other currencies, the euro, into the United States dollar, making the dollar stronger relative to a lot of other things, right? But it could have actually the reverse effect. I don't see money leaving American assets. I just think it's probably going to come out of equities, go into things like treasuries, and yes, some of it will go into Bitcoin and gold. Obviously, the biggest proponent for I would be the biggest proponent for Bitcoin, as it is the future of wealth preservation. But unfortunately, most people aren't going to see it that way, and yeah. So, but I'm just trying to be the devil's advocate here and think about it creatively. Is like money could actually flow into United States assets as a result of this, because in 2008, it was a world event. It was definitely not contained in America. And I think a lot of investors around the world are going to remember that and say, hey, let's go ahead and buy what worked last recession, and that was mainly gold, right? And that was also United States treasuries. So hopefully Bitcoin will be on their mind as well while making these decisions.
That's that you make great points, but I just do want to point out that I've said for a long time to people when I talk about crypto, the exchanges, this and that, and they go, but the bank, they're FDIC insured. There's Bitcoin don't have that. Crypto exchange don't have that. And I'm like, the fact that you refer to the fact that you refer to the banking industry's failures that forced the requirement for FDIC to exist as your reason for believing in the bank should tell you that you're putting your faith in something that's already proven itself to be flawed.
Right.
So, and plus, when you like, they're starting to show the cracks in their armor right now. Like, hey, FDIC insurance. Yeah, we only cover $250,000 per person.
Yeah, it's kind of like, and I know we're over time here, Tim.
Well, we had technical difficulties, so running over is.
I know, but a metaphor has come to my mind, and this is definitely seems to be the week of flurrying and expanding metaphors. But it's kind of like, if you think about it, like investors are settling for a bicycle because it has training wheels when there's a motorcycle that's ready to go, right? We're happy. Investors are happy. Thank you, Piper. Investors are happy to go jump on a bicycle because it has the FDIC training wheels, and that's been appealing. We've been conditioned to believe that FDIC is like this magical thing. And that's because it has bailed out a lot of people, a lot of Americans, a lot of 401k holders through scams or periods of uncertainty. It has worked, right? But the fact that it's training wheels on a bike should make you think, well, couldn't we just build a better bike? Or maybe we could learn how to ride a bike a little better, financial education. But now that all of that is out the window because we have a motorcycle, right? Which is Bitcoin, right? Just hop on the motorcycle, forget about the bike, forget about the training wheels, and just ride off into the sunset, baby.
A phrase that I coined, I don't know if I've never heard anyone else say it, because T-Shroom, you were playing devil's advocate there. I want to play angel's advocate and say, I think you're right. America has some financial advantages that other countries don't have. Let's just go ahead and call them buffers. We do have, because the dollar is the main currency used for worldwide trade, and because we have the ability to just print money, and because we have the FDIC, we have these buffers in place. But when you run through buffers and you start to get down to the metal, just like a brake pad has a lot of fluff in there. It has a buffer, but eventually you wear it down and then you get metal on metal, and that's where the real problems start. That's what we're seeing take place. Yes, America has continued to remain the most wealthy country in the world. Yes, every single time we have a problem, we find a way to bail ourselves out. But that bailing out is a buffer, like a brake pad, and there's only so much of it before we get to that metal on metal, and then we're gonna have some real problems. I would like to think that we find a better solution before we see metal to metal. And that would be Bitcoin. With that said, though, it is time to wrap out the show. We went a little long today because of those technical difficulties, but thank you to everyone who stayed with us the entire time. Before I let you go, I want to make sure you guys know, because there's only 4 days left, Chart Prime is phenomenal. You guys saw me and Army Piper use that throughout the show. A fantastic tool. But go over to my screen here, Army Piper. If you click on our link in the description down below, you'll go to a page like this where right now, for just the next 4 days, for only $900, this is a 50% discount. You can get the lifetime deal. After the 20th, this is going away, and it's not coming back for a very, very long time. Even if you don't want that, if you just want the monthly or the quarterly, when you use our link, you get 45% off. The problem is, if you click on this link and then you try to scroll and you look for other tutorials, when you come back, you will not get that discount. So if you want to look around and explore more of Chart Prime, go ahead and do so. But when you're ready to purchase, make sure you use our link, because not only does that support the channel here and the Investing Bros, it also supports you by giving you that amazing discount. Make sure you go and sign up today. Go ahead and go off my screen here, Piper. Thank you again to everyone who joined us. Make sure you guys have hit that like button. And if you are new here, subscribe to the channel for more daily content covering all of these topics. With that said, though, we will see you guys tomorrow. Everybody have a great day.